everyone, thanks for being here today. David Kivitz, CEO of Xtraction Services. It's a company that's doing high volume equipment leasing and distribution in the cannabis and hemp space. By way of background, started my career in structured credit and built a very large scale company in my prior endeavor, having acquired $100 million in distressed residential assets after the US housing market crashed, and launched a production home building company to build all of it out, generating $250 million in revenue between 2013 and 2017. We think this is another interesting opportunity to take advantage of a lack of debt capital in the space and giving processors and oil manufacturers access to large-scale equipment without having to have all the capital available to access that technology. Obviously, this is a play on the pickaxes and shovels of the business. We like the equipment. It has adaptive reuse in other industries. It also serves as our collateral as we provide financing to all these different groups. This is why we call ourselves Xtraction Services. You'll note we don't call ourselves Cultivation Services. We have no interest in financing cultivation equipment. We like the critical assets that produce the majority of the value in the cannabis space. As you can see here, the market is expected to be 90% oil-derived products. The benefit of that is we want to actually provide the equipment that produces all of that oil and help finance it. What are the problems in the industry today? One, highly capital constrained, particularly in the United States, and there is no institutional debt market right now for the industry at all. Two, the equipment that these companies have to acquire to build full-scale production lines for oil manufacturing is very costly. Three, there's technology obsolescence. This equipment is moving very fast. The manufacturers who produce this equipment, A, there's multiple types of technology, and B, the industry is evolving. The equipment is evolving. And so when somebody, for example, in Colorado who bought equipment 5 years ago wants to do something with that equipment, they're using stale technology, they're no longer a low-cost producer, they need a program that can give them access, just like Xerox or an auto leasing company, for them to take the equipment, come back and be able to trade it in, and have financing right when they come to take it. That's what we've solved. So why do we like our business? One, it's a high margin business model. We're not a plant touching company. We're not subject to 280E taxes in the United States. And because of the benefits of depreciation, we actually get to reinvest all of our NOI because of 1 year depreciation of the equipment that we're buying. Two, obviously I mentioned my management team. You've heard my background a little bit. The rest of the team is extremely senior and has done many number of different things in private equity, specialty finance, and has run extraction facilities. Three, it's a highly scalable platform. It's a leasing business. We can add new customers without adding a ton of people to actually run that operation. It's a proven business model. Equipment leasing exists in every industry. It just doesn't belong right now in cannabis and hemp. We've brought it to that space. We have 4 methods for folks to actually take equipment from us and that we help them finance it. One, we're a distributor for equipment manufacturers, which means we bring them leads and they pay us in exchange for those leads. Another option we have is a layaway program or purchase finance. What that does is the customers can basically buy a product without having to pay for it all up front. The same goes with our leasing program, although typically with leasing, it's a longer duration. The real thing that sets us apart is our royalty program. We have a team of people in our business who understand extraction, every different type of technology, in many cases better than the customers we have themselves. What that allows us to do is create floor plans for our customers, power and load calculations, help them train their teams, provide SOPs, and give them 100% of the equipment that they need to produce the oil or the end product goal that they have. In exchange for that, we get paid on a fixed cost of manufacturing, or X dollars per gram, for giving them everything they need to be successful in oil manufacturing. What does that look like on a return basis for us? As mentioned, we buy equipment at wholesale as opposed to at MSRP. We then lease it to the customer based on full retail that they would be charged if they had gone to the manufacturer direct. So that's where we make part of our return. And in addition, we finance the equipment for them, and that's the piece that the customer actually pays for over time, which is the financing revenue that we generate in exchange for providing them the equipment leasing options that we do. We have existing customers. We're already active in multiple states across the US. We've also been talking to a number of customers in Canada, as you can see here. We have 3 production lines in Kentucky. To be clear, this is more than just a cannabis story. We're serving the cannabis and the hemp markets. Hemp customers are great because they have extremely high volume, Cannabis customers are also very good because they have to set up infrastructure in every single state. In both situations, it's a lot of equipment. And so we provide the financing to make sure that they have it. As you can see here, this is a part of our existing customer base and the next contracts that we expect to close. As shown here, we have an extremely active contract funnel. We have 12 customers that are in current active underwriting and negotiation. We anticipate closing all of those, or at least the flowing share of those, over the next couple of months, and alongside the financing that we're out completing right now so that we can acquire the capital to actually buy the equipment to then provide it to the customers. As shown, and I'm going to talk a little bit more on the next slide, our revenue projections going into this year, we have about $5.5 million of ARR in revenue, and based on the existing contract pipeline, we think that achieving our numbers is actually very reasonable. And we haven't tried to project any exponential growth in our business plan. Because of the business plan, it's highly profitable, and I'll talk about that in a moment. So here are the full projections for the business. One thing that we always find and get a kick out of in this space, people love to talk about revenue, they love to talk about EBITDA, people like to talk a lot less about net operating income. I'm much more interested in net operating income because of some of the benefits, like I mentioned, with taxes, and because of the recurring revenue model that we generate, it produces quite a bit of NOI. We like that a lot. It means that we have multiple options as we grow the business. We don't always have to come back to the market to raise more equity. We have a business that can cash flow ourselves to growth, and we think that that's a huge advantage versus a lot of these other companies that are raising large sums of money, deploying it into infrastructure, and taking a long time to actually build out from all the money that they've deployed. As you can see here, we think this is reasonably achievable, and we have strong EBITDA margins both this year and going into the future as we scale the business. As you can see here on a comp basis, looking at us where we're going out to market relative to our peers, we're very inexpensive, and we have a higher growth business than many of the companies on this list, and as mentioned, produce a much higher profit than they will. The team is very senior. Alex Carroll used to be the lead scientist at Knox Medical, which has operations in multiple states and is entering the Canadian market, worked with multiple types of extraction technologies. The team that we have underneath him, also extremely experienced. Andrew Goodman, our sales director, used to lead the sales effort at BizNow Media before they exited to the private equity group. And our interim CFO is one of my partners, is a dual Wharton grad, and has worked in specialty finance for quite a long time. Talk a little bit about the cap structure. We've raised $9.5 million to date. As you can see here, we have 32.5 million shares outstanding. We've agreed as founders to a 3-year lockup, not an escrow. We believe in growing the business. We're not looking to sell any shares. And we're raising capital right now, $10 million Canadian, to put into the business to execute on the pipeline that we have right in front of us that's in underwriting. As seen here, that 10 million converts over. We're completing an RTO. We already have the shell. We've engaged in a binding merger with the shell, and this is the concurrent financing that we're doing alongside it. We should be trading by April or May on the timeline that we're operating under right now. In summary, it's a high growth, high margin business. We like both of those things. We have an experienced management team. As mentioned earlier, this is not our first endeavor growing multi-$100 million of revenue as the senior principal or senior partner in the driver's seat. My partner's the same. We're an ancillary business. We can operate our business anywhere. Canada, the United States. It's really a global story, although we're going to stay focused on the US market because the opportunity is big enough right now only to deploy our equipment financing solutions there, and we're talking to customers in Canada as well. As mentioned, it's a high recurring revenue stream. The day we deploy a piece of equipment, that locks us in for a period of time, 12, 24, 36 months of revenue that we continue to produce, even though we've already closed the deal. We like that quite a bit. And obviously, as I mentioned, it's a large opportunity. We have gotten ourselves featured in a variety of different periodicals. I've been featured on Cheddar and a few other places. We understand that obviously as public executives, we're going to be speaking to the investor market and the markets in general. And this is just a sample of some of the places that we've been featured to date. And that's Xtraction Services. Can I answer any questions? Yes. So that's an important thing to note. We are equipment agnostic, technology agnostic. So we like to finance products that have already been commercialized. We don't like funding R&D, but we have customers that need ethanol extraction systems, CO2 extraction systems, hydrocarbon, microwave. As far as we're concerned, Our innovation is the financing platform. We leave the technology to the manufacturers, but what we do is consult our customers on any type of technology. So if they come to us and tell us what their end product goals are, we can spec out a full production line for them using any different type of technology in the space. More important than that is our customers, because we're leasing equipment and we have a trade-in program, they can lease a piece of equipment from one manufacturer and trade it in at the end of their term for something completely different from a different manufacturer. There's no one else doing that in the space. No, and that's the advantage we have today. Equipment, so there's two things that separate us from other equipment manufacturers. One, there is no one else doing this at scale. Largely the reason is they have lenders that don't allow them to foray into this business in the United States today. The second thing is, because we've run extraction facilities, we're doing independent third-party testing on feedstock, we're doing independent third-party verification of offtake agreements, and obviously doing our own analysis on their full production line. Why does that matter? Because at the end of the day, we need to make sure that they're producing oil that they can sell, because that's how we get paid. Any other third-party equipment manufacturer or equipment leasing company that would try and enter into the space would be years behind us in terms of expertise in extraction itself. Any additional questions? Thanks everyone for showing up today. Appreciate the time. Thank you.